Hey traders, this is MsPutOptions, and today we're going to talk about trading for a living, actually being able to trade and that being your only job. So we're going to go over some figures, and probably the first figure I'm going to show you, a lot of people are going to be turned off immediately, but I just want you to listen to the entire video. It's going to be very, very quick. I do have a small dog, and I'm going to try my best not to have my dog bark during this quick video. But we'll just have to keep hope alive with that particular issue. And there we go. There we go. So anyway, looking at the first figure here, like I said, it's probably going to turn a lot of people off. But if we're looking at needing $48,000 worth of collateral in order to trade for 1 week's time, if you guys have looked at any of my stock tweets, or if you looked at any of my Twitter posts, you will see that I trade a large amount of contracts, and so I'm getting this $48,000 based upon the number of contracts that I trade in 1 week, which is roughly sometimes 480 contracts or sometimes less. If we're looking at the width in between my strike prices, this particular width is a reflection of like an ETF, and ETFs have a width of roughly about $1. And if we're looking at the number of the shares, well, 100 shares, so we take 480 contracts times the width between um, our strike prices. If we do some ETFs, we're looking at $1 in the width, 100 shares, and that the collateral needed would be $48,000. So let's look at some other figures here. If I did 480 contracts and I collected a 5 cent premium, and a 5 cent premium entering on a Monday and exiting on a Friday. I reiterate, entering on a Monday, and I shouldn't say exiting on a Friday. I should say expiring worthless on a Friday. If the premium collected is 5 cents, then the probability of expiring in the money is going to be very, very low. So we take the 100 shares, if we times it by 480 contracts times the premium collected of 5 cents times the 100 shares, that's going to give us $2,400. And this is a profit in 1 week. And if we take this one week profit of $2,400 and we times it by 4 weeks, our profit for 1 month would be $9,600. If we take this $9,600 and we times that by 12 months, meaning a whole year, then our profit would be $115,200 for a whole year. So I don't know too many people who would frown at that dollar amount, and I don't know too many people who could not live off of $115,200 for the whole year. So let's move on with some other figures. So somebody sent me a message recently talking about the commissions and fees that TD Ameritrade charges, and I just use this particular number. This is not what I pay currently. You can negotiate your fees with any of your brokerage companies. And if anybody knows of a brokerage company that charges lower fees than this, a lot lower than this, please let me know. So let's say hypothetically I had 480 contracts, and for each contract they charged me 75 cents, which a lot of people think is high. And then on top of that, they charge additional $9.95. So in order to place a trade for 1 week's time, it would be $369.95 in fees. If we times that by 52 weeks, which is in a year, then within a year's time, I would have paid $19,237.14 for the entire year. So, of course, this is going to now affect the overall year that we collected of the $115,200. So let's move on to some other numbers. So if I subtract what I made for the year minus the commissions and fees, instead of making $115,200, I am now down $95,000, 600 and $962.50. So this would, which I would have made annually. This would be my annual amount. And still, there are not a lot of people out there in the world who make over $100,000 a year. And now you have made, looking at this particular scenario, you have made $100,000 in 1 year just sitting by the computer trading. Low probability of expiring in the money, entering a trade on a Monday and exiting, or shall I say, expiring and worthless on a Friday. Now, there's another number that I didn't add in, and the reason why I didn't add it in because it's going to cause a little confusion, and I didn't want to go there. But the number I didn't add in is that I initially said that per week we were going to collect $2,400 for a 1 week's trade, and then we would have to subtract our commissions and fees out of that dollar amount. And so, really, we would be taking home per week, or shall I say, our profit per week would be $2,030.95 per week. Now, the number I didn't add in is that every time, of course, you get a profit, then the next week, the amount that you have in order to trade, which was initially, if we started at $48,000, now we are $2,030.95 richer. So this would allow us, if you add this into this number, this would bring this up to roughly about $50,030.95 in 1 week. And this would allow us to be able to trade more contracts. And more contracts, of course, would affect the amount of commissions and fees, but it also will affect the annual outcome that you would make per year. So I just want to let you guys know that you can trade for a living. You can trade and collect low premium. And normally when you collect low premium, especially if you're looking at ETFs, they have a low probability of expiring in the money, especially if you're only collecting 5 cents. So I hope this makes a little sense to you. How you'll be able to stay at home and trade. You don't necessarily have to have a job, or maybe you like working and you can have a job and trade at the same time. Of course, these figures are depicting expiring worthless. They're not depicting getting in the trade on a Monday and having to exit on a Friday. Having to actually get out of the trade, because if you have 480 contracts, and to get in the trade for all 480 contracts costs you $369.95, you're going to have to, in order to get out of that trade, spend the same dollar amount to get out. So we want our trades to expire worthless. Now, with that being said, if in order to get out of the trade is going to cost you 5 cents or less, if you're thinking, if you're dealing with TD Ameritrade, if 5 cents or less to get out of the trade, they do not charge you additional commissions and fees. But you really wouldn't want to do that anyway, because you already entered the trade collecting a premium of 5 cents. So why would you want to get out of the trade with a debit of 5 cents? So 5 cents from 5 cents is zero. So you wouldn't want to do that as well. So like I said, this scenario is based upon getting in the trade on a Monday, expiring worthless on a Friday. If you're doing 480 contracts and you're collecting a low probability of expiring in the money, 5 cents or sometimes less, then you, with 100 shares, you're going to collect $2,400 minus the commissions and fees. So I hope I made that clear. This is Miss Put Options, and I will talk to you soon.